Stocks with monthly dividends give investors the chance to make recurring passive income. This regularity better fits the schedule of many recurring obligations, enabling an investor to use dividend income to cover their outgoings. As a result, monthly dividend stocks are perfect for investors who depend on their portfolios for income, such as retirees. Here is a closer look at the top monthly high-yield dividend companies for 2022 with monthly dividend payments in mind. These stocks are excellent for generating passive income because of that combination. Early in 2022, a monthly dividend was paid on about 50 stocks. But not all of them are worthwhile for investors to take into account. Many didn't provide a dividend yield that was above average. Others appeared to be more at risk of cutting their dividends if the market situation worsens. That drastically reduces the available options. Here's a list of some interesting dividend investment stocks to consider in 2022. Realty Income with a current market cap of $35 billion. EPR Properties with almost $3 billion in market cap. Agree Realty Corporation with a market cap of $5 billion. LTC Properties with a market cap of $1.5 billion. Gladstone Commercial Corporation with a smaller market cap of only $700 million. Realty Income is a real estate investment trust that invests in freestanding, single-tenant commercial properties in the United States, Spain, and the United Kingdom. The dividend from Realty Income is supported from the cash flow of real estate properties owned under long-term net lease agreements with their commercial clients. Realty Income is the undisputed leader among equities that pay monthly dividends. As the monthly dividend company, it advertises itself. As of the beginning of 2022, it has paid dividends for more than 600 consecutive months. Additionally, since its initial public offering in 1994, Realty Income has boosted its dividend more than 100 times, raising the payout at a 4.5% compound annual rate. This makes it a dividend aristocrat with more than 25 years of dividend growth. In the future, Realty Income should be able to keep giving investors a stream of gradually increasing monthly income. In 2021, it purchased fellow REIT Verite. Additionally, it invested almost $6 billion in smaller agreements to purchase real estate. This buying frenzy will contribute to an increase in cash flow per share of more than 9% in 2022. There is plenty of room for Realty Income to expand. The prospect for single-tenant net lease real estate, according to this estimate, is worth $12 trillion on the global market. It still has a solid balance sheet even after finishing the purchases from last year so that it can keep buying homes. Due to this, Realty Income ought to be able to keep growing its portfolio in 2022 in order to fund further dividend increases. EPR Properties is a real estate investment trust. It focuses in owning experience properties like movie theaters, eat-and-play establishments, ski resorts, and gambling establishments. It rents these properties from the owners of the venues under triple net agreements. Experiential real estate was significantly impacted by the COVID-19 epidemic. Many of these facilities were forced to temporarily shut down or operate at reduced capacity. Due to the impact on their capacity to pay rent, EPR Properties was compelled to halt its monthly dividend in 2020. However, now that vaccines are readily accessible, more people feel secure enough to once again enjoy activities away from home. As a result, EPR's tenants are paying their rent on time. As a result, this REIT was able to start paying dividends again in July 2021. Even though EPR Properties currently delivers a competitive return, if its portfolio grows, the company may decide to raise that dividend in the future. It had a healthy financial sheet and a lot of liquidity before 2022 began, allowing it the resources to buy additional experiential real estate. EPR intends to focus on purchasing more attraction-related properties that customers can only experience outside the home because online streaming is threatening to destroy movie theaters. That might increase the long-term stability of its dividend. Agree Realty is also a real estate investment trust. Due to the fact that they produce consistent rental revenue, these businesses frequently make for outstanding monthly dividend stocks. This REIT holds freestanding retail properties backed by triple net leases, which means the tenants are in charge of paying property taxes, insurance, and upkeep. It focuses on holding real estate that is leased to vital merchants including groceries, home improvement, dollar stores, and medicine stores, which are less vulnerable to disruption from e-commerce or a downturn. Agree Realty can sustain its dividend with a consistent stream of rental income thanks to this tactic. In January 2021, Agree Realty changed their dividend payout pattern from quarterly to monthly. Overall, its dividend track record is really strong. Over the past 10 years, this REIT's dividend has grown at a compound annual rate of 5.5%. Given that Agree Realty is always growing its clientele, this upward trend should continue. The retail REIT increased its ability to generate rental income and dividend payments in 2021 by acquiring a record number of properties worth $1.4 billion. Strong financial standing allows Agree Realty to continue expanding. As a result, it anticipates investing in new real estate worth between $1.1 billion and $1.3 billion in 2022 to fund dividend growth. LTC Properties is a healthcare real estate investment trust. It mainly makes investments in senior housing and skilled nursing facilities that are backed by mortgage loans, triple net leases, and other structures for investing in the cash flow. With the help of this technique, the REIT can sustain its monthly dividend with relatively constant income. The pandemic had a severe impact on senior homes, which included LTC Properties tenants. Many had trouble paying their rent, which caused several of them to declare bankruptcy. However, this REIT weathered the storm and partially made up for the lost income with fresh investments because of its strong financial position. It has been able to maintain its monthly dividend as a result. LTC Properties rental income should rise in 2022 as market circumstances improve as the pandemic fades. The high-yielding monthly dividend paid by this REIT seems sustainable when one considers its most recent investments. Gladstone Commercial Corporation is a diversified real estate investment trust. Its primary holdings are net leased office and industrial properties in the United States, which account for 48% of its total portfolio, as well as a few retail and medical office buildings. Due to the higher investment yields offered by secondary markets, this REIT focuses on them as well. Gladstone has been able to pay a continuous dividend thanks to this strategy, which enables it to earn relatively reliable income. More than 200 straight months of dividend payments from this REIT have been at or above the previous month's level. It has low growth but a good yield. Over the years, Gladstone Commercial has continually added more office and industrial properties to its portfolio. It had strong financial standing and enough liquidity at the beginning of 2022 to support its monthly payout and keep growing its holdings.